Can you put multiple businesses into one? You can't now divide. But if you bought it multiple businesses prior to January 1, 2018, absolutely. So it does pay to have bought the payroll service separately or operated separately. You can buy it separately now. You had to be operating it separately prior to January 1, 2018. No, I don't know how many times I've been asked, the grouping rules of 469 are irrelevant for the QBI deduction. So let's say you do have multiple businesses and you want to put them all together. Good. That's called aggregation. 5 rules. Each entity must be a trade or business. I didn't say an entity. Each entity must be a trade or business. And you can't crack them apart to take advantage of QBI. Number 2, the owner must own 50% or more in each one of those businesses. You're going to use calendar year anyway, so it's got to be the taxable income. If you're going to aggregate, you cannot put a business that's involved with specified services. And then meet 2 of the 3 factors. The same product and service must be involved if you're going to use 2 of these 3 factors. A restaurant and a food truck, that's the same product and service. A gas station with a car wash, that's the same product or service. Share facilities or centralized business. So if you're in the same building, or you got common personnel, accounting, manufacturing, and IT, that works. 2 out of 3 operate in coordination with other aggregated businesses. That's going to end up being your supply chain interdependence. Other examples. These are new. In the final regs, retroactive back to 2018. 2 rentals are commercial. One's in New York and one's in Los Angeles. And they share accounting, that's 2. But there are 2 commercial rentals, but they don't share, and there's no integration. Nope, you fail, you only got 1. Similar commercial rental share management, that's okay. It's commercial rentals, sharing management, and I don't care who owns the management, you can outsource it for all I care. Business operating through a relevant pass-through. I don't know why they use relevant pass-through. It just irritates me. It's a pass-through entity. So aggregating pass-through entities is permitted. And they don't have to be aggregated in the same way. But if you forget to aggregate, what a big mistake. You have to attach to each year's return, this is what I've aggregated. So let's say that one of your clients owns this is an example right out of the regs, except they didn't use dump. A garbage dump, electronic, and so they call themselves garbage dump, electronic security dump, social media dump. That's the 3 names, 3 entities. And they forgot to put the notice, oh, I want all the dumps to be treated like 1 for QBI. How would you like to be the accountant that forgot to do that? And do you think that there are accountants that didn't know? Can we fix it?